It is the 4th of March. I am Jason Sen. I'm going to look at some of the trades that went well last week, some of the trades that did not do so well, and give you some ideas of what I'm looking to trade this week. And by the way, as you probably know, I live in Thailand. I'm going to the UK at the end of this week for 2 weeks, so I'm hoping to meet up with some of you guys. I'll put a Telegram link in the box below. You can click if you're interested in coming to one of my meets. Okay, we're going to start with gold, as I always do, one of my most favorite markets in the longer term. This is from October 22. We are in something of a bull trend, although more recently we spent December, January and February just going sideways. We did do quite well last week. We were buying at the support level in the low 2020 area, getting into a short position at 2047, 2050 on Thursday to see the market dip back to the buy level at 2041, 2037, which was the exact low on Friday. We were scalping the exact highs and lows up until Friday. We got to my target of 2049, 2050 on Thursday. On Friday, I said if we break above there, it's further confirmation of a buy signal, and we go to 2067, but we got to 2088. We rocketed $50 in a day. Now, what's next? 2088 is the exact high of this candle in late December. So that, I believe, is the reason why we've come to a halt there. It's not the strongest reason, but that certainly would have been my next target for obvious reasons. Now I'm looking to buy into dips. There's two things that are on my mind. Are we just testing the upper limits of the sideways range, or is this a serious bull trend that has some legs and can continue in the days and weeks ahead? Now, I can't be sure of that. We've had way too much sideways action, and I think it would take more than one burst higher for this to be the start of a bull trend. But even if it is the start of a bull trend, it would be perfectly normal for the market to come back, test support, then push higher. Not going to move up in one straight line. You can refer to my gold report for today, which does have two support levels on there that I would be willing to try a long position at to see if this is going to develop into a bull trend. Obviously, if we break above 2090, that should signal a move higher today as well. And I've also given targets for that move higher on today's report, so I won't repeat them now. Oil staging something of a recovery after the losses from September through to December. We've beaten the 38.2% fib. It's been tricky because oil has been trading sideways for far too long. We're only in the middle of this channel right now, going back to October 22. But I think we can continue to recover because we have pushed above the moving averages on the daily chart, the 100 and the 200. We have pushed through the 38.2% fib, and we've beaten the previous two highs that we saw in February. I would be a buyer on a dip back to the support levels that I have on the WTI report. Again, we did well in WTI. We were selling it around 79.30, 79.80, and that did work well on several occasions over the last week or two. And now that we've broken up through $80, that was my buy signal. For now, I would be interested in trying long positions if we dip back to the support levels, which I have put in today's WTI Crude report. The US stock markets have also done well for us since October. The E-mini S&P has rocketed over 1,000 points, 25% from 41.22 to the new all-time high we saw on Friday at 51.49. Incredible. Now, what happens next? Which has been a very strong bull run, punctuated by little bull flags. Quite easy to read, in fact. The low down here at 50.65, 50.60 was my buy level for last week. It was the exact low of that little bull flag, and off we went. We beat the previous high at 51.23 and pushed on to new targets. Now, there's no mistaking the trend, and there's no reason to think that's going to reverse. I absolutely would not suggest a short position. There is nothing to indicate that this market is going to turn around at the moment. Clearly, the bulls are in full control. So again, I remain a buyer of breaks above previous all-time highs, or I remain a buyer on dips to support levels, which again, you have in today's E-mini S&P report. Not surprisingly, the NASDAQ is also pushing higher. I had a buy level at 17,800, 17,750 last week, and we only missed that by 26 ticks. Maybe some of you jumped in a little bit early. If you did really well, as we beat the previous all-time high from February, which was at 18,144. We pushed up through there for the buy signal. We're now up to 18,372 on Friday. That was a new all-time high for the NASDAQ. We're on our way to my next targets, which you have on the report for today. And I've also got buy levels for the NASDAQ on any pullback, because of course we are in a bull trend. The previous all-time high should certainly act as a support level from around the 18,145 to 18,120 area. All the details are on today's report. Again, NASDAQ overbought in the short term and on the daily chart, but there is nothing to indicate that this market will turn down. Clearly, buy the dip strategy is working at the present moment. The Dow Jones did not manage to make a new all-time high on Friday, but I'm sure we will get there and break higher eventually. 39,343 is the level to beat for the E-mini Dow Jones. Probably just forming a bull flag here. Again, no reason to short this market despite overbought conditions. We will remain a buyer on weakness. And actually, we did pick the exact low for the week last week as well, didn't we? Now we just need a break above the all-time high of 39,343 to trigger the next buy signal. Okay, those are the markets where we did well last week. However, moving on to part two, where we look at the forex markets, not so well in the yen pairs last week. Now, New Zealand dollar versus Japanese yen in a very clear bull trend. We'd made some money on that run up, and I did actually expect the pullback. So it was extremely frustrating when we overran. 91.50, 91.30 was my buy level for obvious reasons. Previous swing high, confluence of Fibonacci levels there. Were actually moving averages on the 4-hour chart, which also convinced me that that area should be a good support level. But we overran just a little bit too far to take us out of the long position before the bounce. Now I'm a little bit confused as to what to do. Clearly, the yen remains in a bear trend. You can see we are in very much of a longer term bull trend from 2020. It's almost 4 years of bull trend. So there's no way I'm going to short this until I see a pattern. There is talk about a more hawkish tone from the Bank of Japan coming soon. I believe there's a wage round of negotiations in March. Once that's out of the way, the bank has a clearer idea of wage inflation pressures. They may decide on a more hawkish interest rate tone, which will push the yen higher. So it is time for caution. Right now, I'm still a buyer on weakness, but I've decided to leave it until I get a bit more clarity. There is clearly very strong support for the New Zealand dollar yen at the T40, 90, 20 area. We've got a confluence of fib levels. We've got some congestion there. We've got the 100-day moving average moving up towards there as well. Moving on to euro versus the yen. Again, I was a buyer on weakness last week. I got my level from the 4-hour chart and we overran it just fractionally, but enough to trigger a stop. I do have tight stops, 20, 30 pips on a stop, looking for 30, 60, maybe 100 pips profit target. So the strategy works extremely well when it works, but unfortunately last week we just overran my levels a little bit too far. I got taken out. If you're risking 1% on a trade, not a big deal. To lose 1% is a very minor dent in the trading account, but it's frustrating when I called it right, called the yen stronger, looking to sell it, but we just overran my levels a little bit. Same thing happened in the Canadian dollar yen and the Aussie dollar yen. Canadian dollar yen does have good support around 110.10, 110.00. I can see that from my 4-hour chart as well. I haven't put any yen trades on the trade sheet for today. I'm just going to take a step back and wait for some more clarity in these yen pairs. I've got a feeling we will start building topping patterns and we will start to see a more positive tone for the yen. For example, here in the Aussie yen, it really would have been right to try to short the market as we approached that upper trend line. But because the yen was in such a bearish trend, I didn't want to do that. This is a beautiful channel to trade, and I will be looking for trades in the Aussie versus the yen going forward. Now, the one FX trade that did work quite well last week was buying the euro versus the Aussie dollar. We got to within 3 pips of my 167.00 target. I think this is a breakout trade. We've come back to retest the trend line. So I have got that as a buy level today. I'm hoping that finally we will resume the bull trend after this big triangle pattern, which I believe is a consolidation pattern. I believe we've broken up above it. We've done the classic retest of the trend line. There is talk about Australia being one of the first economies to cut interest rates. So maybe that will feed through to this pair and we will see the Aussie weaken, the euro strengthen. Okay, that's all for me from today. If you've got any comments, I will always answer as quickly as possible. Check the descriptions box for various links to free stuff.